My name is Garth Mackenzie and I'm the founder of Traders Corner. I'm a technical analyst and an ETF strategist. On this show, we're going to take a look at the S&P 500 and the recent trading activity, with the market having a massive move to the downside on Monday, the single biggest points day ever in history on the S&P 500, and that was accompanied with a massive spike up in the VIX. If we take a look at my first chart, you can actually see that trading activity there quite clearly. So what I'd mentioned last week when I was here, I mentioned that the market looked as if it might be vulnerable to another move to the downside, to possibly retest or even take out the prior lows that we saw in late February. Now that certainly has happened, and that has been accompanied with a massive spike up in the VIX above 60 earlier this week. It now looks as if some stability might be beginning to emerge. We're starting to see a little bit of positive divergence on some of the oscillators on the S&P 500. So it might begin to indicate that there is a little bit of a relief bounce coming. What I want to look at in the next chart is something I discussed last week, and this is the ProShares UltraShort SP 500 ETF. Now this is a 2 times leveraged inverse ETF. And what I mentioned last week was that if we were of the view that the market was likely to have another leg to the downside, then this ETF would probably spike to the upside again. And any dip in this ETF would likely spark an opportunity to buy it for another leg higher, which would correspond with a leg lower in the S&P 500. Now you can see that's worked out very, very nicely. It's traded up from about $26. It got up to nearly $33 earlier this week. So nice big gain over there, and one would be looking to take profits here if they haven't already done so. But let's then bring it forward to the trading activity of this week on my next chart. And this now once again shows the S&P 500 and the low that we saw earlier this week and the VIX that spiked up to above 60. Now, in the past, what we've typically seen with a VIX spike like this is that it will be followed by the VIX moving lower, and that'll also be accompanied by a bit of a relief bounce and a bit of an oversold rally in the index itself. What I suspect could quite feasibly happen here is that we see some relief buying in the S&P 500, possibly to take it up towards the underneath of the 200-day moving average. That would be almost a 10% bounce off the recent lows, so not a small bounce by any means, but big bounces like that are quite characteristic in volatile markets, and in fact in bearish market environments. You see some of the biggest gains you'll ever see in bearish environments. Now let's take a look at the next chart, and if we take the view then that the S&P 500 might be ready for a bit of a bounce going into the next couple of weeks. This is a very well-known ETF, probably the most well-known ETF worldwide. It's the SPY. It's a 1 times leveraged ETF on the S&P 500. And there you can see the trading action very much mirrors what we've seen on the S&P 500 this week, as you would expect. Now there are two gaps in that chart, up at $290 and another one up at $300. If we take the view that the S&P 500 is likely to stage a bit of an oversold bounce from these levels, then this is probably an ETF that one could look to buy. And I think that if we do see it moving higher, it would likely target those gaps, either the first gap at $290 and possibly the second gap up at $300. So this is a 1 times leveraged ETF. It's not that racy, but nevertheless it could do quite nicely in the event that the market does stage a bounce from these levels. Now my next chart takes a look at something that is a little bit more racy. This is the ProShares Ultra S&P 500 ETF. The share code here is SSO. This is a 2 times leveraged ETF. And again, you can see the trading activity very much mirrors what we've seen on the S&P 500, but the movements here are simply amplified because of the fact that this is a leveraged ETF. If we take a view that the S&P 500 might bounce a bit from these levels, then you can look at the gaps up at $120 and possibly at $130 being targeted. And given that this is trading at around about $107 currently, that's quite nice upside potential. Do just keep in mind when trading inverse and leveraged ETFs that you need to really be careful of your risk management. Monitor your position sizes carefully and always trade with a stop loss. That is absolutely vital, particularly with the leveraged ETFs where the movements are amplified. That's all I've got for you this time. I'll be back again next time with more market analysis and another look at some other ETFs.